Hey everyone, DayTraderRockStar here with you with a special video. Been working on this video for a couple hours now because I think it's a very important video in these market conditions, and I'm sending it out to everyone. Over the last week and the last 2 weeks, we've kind of scaled down the 10 for 1,000 watch list to more short-term plays. Because the market conditions, basically the news out of Europe has weighed heavily on the market. If you're involved in the markets on a day-to-day basis, you know how the market has been the most volatile in this past 3 months than it has in a long time, in years, I would say. And it's all based on the the uncertainty of the situation in Greece and in Europe. And who knows, there might be some underlying factors here in America too that are continuing to contribute to the weakness in the markets. Markets haven't broken down yet, but what we have done on Day Trading Radio is pretty much went back to intraday setups instead of swing trades, where I normally are holding things longer. And you can see over the last, these are the trades for this past week from the 26th to the 29th. Closed trades, and you can see when 0 represents how many days hold. 0 represents a day trade, 1 day is an overnight hold, and so on and so forth. And what I'm going to do is I'm going to talk to you today about how you could still make money in the volatility here. It actually gives you great opportunities as an intraday trader. That's it. That's it. And there's a few techniques that are going to keep you keep you out of the out of harm's way, because we all know that the markets are very choppy on the news. And what I'm doing here is there's about 3 or 4 techniques that I'm using during the day. I'm sticking to those 3 or 4 techniques to kind of keep me out of a lot of the chop, and I'm only waiting what I call the high probability setups. So we're going to talk about those 4 techniques today. I think they're really probably my 4 best techniques I like to use on a short-term basis. So that's it, and you can see we actually had a great week overall. I did take off a couple longer term positions, the Cisco, which I've been holding, and Cisco was actually above my my buy entry last week, and I never took it off. I pulled back and decided to take that cash, and I think that cash could be used later on if this market does get a little bit weaker. But other than that, we had a good focus list that I send out each week, and this focus list is where we get a lot of these scalps and a lot of these setups for this week. And I get everything from the Netflix, the Adobe, which was actually a good short, the Potash, ESRX, the TBT, FFIV, Deutsche Bank, again FFIV, MT, Potash again. So you're seeing a lot of the stocks repeated, and once you get to know these stocks, it's easier to go back into them over and over again. So you're going to see this week's watch list, a focused stock of some probably good quality stocks, but we're going to stick to the techniques that are going to be explained in this video in those setups, and they're not going to be longer term swing positions. All right, so let's start off by just breaking down this market here for a second. We're just going to look at a couple of the techniques I like to use, and one of the techniques I like to use is relative strength, relative weakness, and that is that's measuring the individual stock that you might be looking at versus the market, which I measure against usually the S&P 500. I usually use the S&P 500 on the site mainly because it's it's the biggest index that kind of, other than you have the Dow 30, you have the Nasdaq 100, and you have the S&P 500. So 500 stocks versus the smaller amount on the other indexes, and you should get a better, a wider view. And normally, you see these markets kind of trend together different, even though there has been a separation between the Dow and the Nasdaq over the last week. But other than that, I do follow the S&P and track these stocks against the S&P. And depending on what the market is, and a good example of relative strength, relative weakness, and we're going to give you an example of that. I'm going to try to give you this example of ExxonMobil. Now, ExxonMobil was a stock that was showing good relative strength earlier in the week. And relative strength, again, I did an overlay here because I thought it was a good way of explaining this. The overlay, the red line, represents the S&P 500. And actually, we're also going to go back to the S&P 500 here. and give you a view of the S&P 500 on the same time frame. Here it is at the beginning of the 28th, and you can see the S&P popped up and then pulled back down to the lows. And we pulled right back down to the 200 period moving average, which is a good indicator, good support line. Stochastics got oversold there, and we did get a little bounce. But the fact was, we moved. We opened up, kind of ran up a little. Then we started selling off. We actually came back down to the lows of the day. Now, if we go back out on ExxonMobil, this represents that red line. You see the gap up to move up and pull back to the lows of the day. Well, you can see ExxonMobil actually did not pull back to the highs of the day. Held off the highs of the day. It wasn't really tracking the market. It was showing better relative strength versus the overall market. And we're very close to the highs of the day. So lots of times you see a stock that kind of hangs around the highs of the day as the market's selling off. The first bounce the market really gets, you get a takeout of the new highs, and that's all you want to get. Remember, this is a short-term trader's market. So what we want to do in the morning is have our focus list of stocks, see which ones are setting up with the relative strength or weakness. Same thing works if the stock is actually, or the markets might be pulling, ramping up and moving up, and there's a stock that has not moved up relative to the market. It might be consolidating the lows. The first pullback will drop that stock to the lows. So that's the first technique that I look at during the week, opening day. I usually start to look at those right at the open, 9:30 to 10:30, and that's usually a good setup for the first trade of the day. Depending on which way that we gap, or if there's a gap up or gap down, I also want to have my focus list tell me which stocks are setting up for ultimate high probability setups where there's multiple indicators getting ready to set up. And the example I'm going to use for this is the CCJ and Camp. I want to take off this overlay, and let's just take this overlay off, remove them all, and go to the daily chart. And excuse me while I fix everything up here. I want to zoom out. Alright, this is a stock that I've brought to the watch list this last week, and we had a beautiful pop off of that level. This was right on the watch list, and we got that pop, and I know a lot of people took profits, and it actually came back down. It came back down, and we actually gapped right back down to the trend line. Now, this trend line is held up ever since it's been touched, especially with the oversold stochastic bounce. So we definitely got that bounce, but yeah, we had some weakness coming back in, and this market definitely is on shaky ground here. And remember, technicals work pretty well without the influence of news. And when we have news that kind of comes in and changes the parameters of the market and changes the volume. It might be, and selling programs and people just getting out. And the technicals break down, and they no longer will, be valid. So again, even the setup does look good on the bounce down. Again, it has to be considered. We have to consider all this to be short-term trades based on until some news comes out and kind of clarifies the direction in the market. The 5-minute chart on this was a great chart on stock on Friday because we gapped down to the to that trend line, and we picked it up here, and we had a beautiful trade and actually continued to run all day long. And this was also a let's take a look at the overlay on this one, and you can see the overlay here. We pulled back, but we didn't really pull back. We just pulled back to the 20 period moving average, and we kind of continued to move up off of that. Not a good example of the overlay on that. That was just a great stock to pick up down at that trend line again. All right, so again, that's a CCJ, another example of another technique I like to use, and that's kind of a gap down to a channel. A stock that's setting up for this week that we will put on the watch list will be BTU. All right, and again, we're getting very close to a, we'll take a look at the daily chart, and this is probably an old trigger from an old watch list over here. Again, a lot of these watch lists, so don't get confused with that. Just understand it's BTU is the symbol. And you can see all of a sudden how how good this channel is actually setting up. We have a very tight channel line, 1, 2, 3, 4, and we're coming down to that fifth test of it. Stochastics are set up for a double bottom bounce. I love this setup here. I absolutely love it. Been holding out. I said, well, maybe we could actually hold out and try to get that touchdown. So again, if we had a gap down to this trend line, say Monday, Tuesday, this would be worth the entries, even just for a scalp. Again, everything pointing to a bounce, a bounce coming up in BTU soon, very soon. And again, that level, I think this is going to probably be a really good trade this week. This level right down, I'm going to move this right down 31, around the 3160 to 70 area. We're trading at 32, 33, so a 2-point move down. We had a gap. If we had a gap down for any reason, definitely want to be on a scalp at least. So the BTU is a similar setup that we're going to be looking at this week. And again, takes a lot of the risk off the table, especially when you buy a gap down. Another technique that I love to use in this market is actually understanding the relationship between the market and your individual stock that you're trading, and how that can help you. And again, remember, the volatility here is what's going to hurt most of the traders. Even though you can profit off of it, you must, have your game plan set up. This is a very high intense work zone that we're in. That things are very choppy and stuff, but there's definitely opportunities in the market, and you have to have those opportunities planned out, mapped out. You really got to map them out so they can happen, and you don't get shaken out of your trade. So what I'm looking at here is always taking, what I do on the show is I'm always paying attention to the S&P 500. Now this is the daily S&P 500. When we always calculate the daily. Again, you can see that what we have here right now is a bearish flag. The move down. I think everyone's going to come out and say the same thing. Continuation pattern, sideways consolidation, breakdown, and that's what everyone's looking for. And it almost looks like we're coming to that decision early this week. We got the crossover on the daily stochastic is very negative. 60-minute chart coming down, oversold. This is a little positive. We didn't get lower than the previous low back on September 22nd, which was interesting. But we are, that's just the bottom of the channel here. Anything can happen over the weekend. Again, this could all play out very early next week. But if we do get a cross back up, a momentum back up, and a break of this trend line, this is another thing you have to pay attention to, is looking at the 60-minute chart more. 60-minute chart here, just following the markets. You see, there's definitely a trend that goes on for days. So you have an upward trend here from the 22nd to the 30th, a whole week uptrending. Then we got a 5-day pullback. Then then a little choppiness. But these trends, the 60-minute bars, once these 60-minute bars are violated, there's a good shot of follow through in that direction. So here we got an upward channel breakdown. We have the downward channel. I'd watch this downward channel for a break up. Pay attention to that. That would cross this up. You might get some momentum to the upside. We're down on the lower part of this channel, and again, it's really going to be news that determines the direction right now. I honestly believe that. Right now, markets, markets are a vehicle to make money, and a trader will trade it from range to range. So in their lower part of the range, it makes more sense for them just to run it back up to the top of the range and do it all over again. And we have to be on board on that. So, but going out on a 5-minute chart, one of the best, and I think a lot of people know from my favorite indicators, the stochastics. And you take a look at the S&P 5-minute chart, and we map this each and every day during the market, and we see that we're in a large channel, and we pushed up into this. We really pushed up into this channel line. But at one point, we noticed that the stochastics got overbought, and this is a classic head and shoulders type of setup. Now, it's head and shoulders is, I consider, a topping pattern, but you have to respect that the technicals here of the momentum and the trend line and everything coming to an apex here typically means that the direction of that turnover is going to be the direction of the breakdown, and that's exactly what happened. If you look at the S&P cash, the S&P futures on this, you can actually see this head and shoulders. It's clear on the 1-minute chart. and you have that shoulder there, head there, and a shoulder here, and that trend line, that neckline here, that slanted neckline, and the breakdown and the retest of the trend line, and then the follow through down. So this was actually you know, a very nice setup for the short side. So, and again, relationship to understanding the markets versus your stocks, you could you know, definitely take swings, scalps into this type of setup to the downside. And I think that's very important to keep that. And these techniques, again, you'll see me go over this. This week I'm definitely going to concentrate on these setups again. You know, so it's going to be very important to watch that relative strength in the morning, watch the individual patterns, pay attention to the 60-minute chart versus and the 60-minute chart and the 5-minute chart and the stochastics with those, because you could see, you know, on the 5-minute stochastics chart here, you know, once we got up into an oversold level, each time we pulled back. So the majority of the time, the odds are overbought levels in a trending down market, you're going to get more of a downward push. This is a trending market to the downside, and on the 5-minute chart. So each time you get up to this level, that's going to give you a better shorting number. That's a high probability short area versus, you know, the oversold level, which, because that could get embedded to the downside, because that means weakness. But strength is being sold into. You're going to get a clearer signal on a downtrend versus the bounce areas, because sometimes the bounce will be no weakness and you won't get no bounce. You'll just get an oversold level, and that's hard to time. So remember, that's kind of a rule, a trick of the trade, a rule. Depending on the direction of the trend, you know, that's how you're going to read the stochastics. A more viable stochastic setup is going to be versus a downward trend, overbought stochastics, upward trend, oversold stochastics. And a great feeling right there. Good setup. And you break that down on the minute chart, and you'll have other indicators that I'm working on. That's going to be released soon. That's going to just tie all this together. So that's that relationship stock, the market, and the stock, 60-minute chart, and stochastics. Again, the 5-minute chart is also going to be very important this week too, which we're looking at there. But in the 60-minute chart, again, we went over the 60-minute chart, how important that these trends are. So we're going to pay attention to this trend and just not put too much emotion in and not believe, because everyone's going to come out. There's all kind of news out there, and if you get caught up in the news, you're just thinking one thing, you know, a drop, and we have to be careful of that, because there's nothing out there that says the market can't, you know, push up above, you know, all this bearish and negative sentiment, and kind of take that opposite side. So we have to have no emotion going into it. See what the charts tell us. Stay with the trend, and then half your work is done for you. All right. Let's just take a look at a couple more stocks. All right. Just want to go over Teva Pharmaceuticals. Teva is an interest stock. This was on the watch list, focus list, I should say, for the last couple weeks, and it did perform nicely. We had a good trade off of this, and it's actually still showing good strength. And going back on this chart, you can see the benefits of just learning the chart and being able to trade the chart over and over again. We followed this chart when it was in this channel and it broke out, and then it was a larger channel based on some patterns. It was an upward channel, perfect head and shoulders formation with the stochastics right here. This is like an inverted head and shoulders pattern, left shoulder. And the breakthrough of the trend line, and we came down to all the way down to the lower channel line. We bounced up, we got oversold again, and we kind of pulled back down and got oversold, overbought. Started to get a bounce. You can see the stochastics now pushing back up. So it's good, you know. Not every day the stock will give you a good high probability setup, but it's important to have a good group of stocks. Say you have 50 stocks, one of them, two of them, maybe maybe more, will give you that signal. And it will rotate. So some weeks one stock will give you a signal, another week another stock will give you a signal, and these are the stocks you're going to concentrate on. And that's, again, the theory behind the 10 for 1,000 watch list too. So again, it does look good. I just want to show you the pattern recognition on this and how you start to see this. This was also a good stock with relative strength during the day. On Friday, when the market kind of just sold off, you could see this one actually holding the highs of the day and it continued to climb up, and it was just a very bullish scenario as the market kind of drifted sideways. You kept on moving up, and at the end of the day, yeah, the market sold off in a lot of stocks. That's why this is a short-term market right now, and trying to stay out of the chop. So that's another setup. And also I want to tell you one last technique we're using on the site is pretty much trading on the news. Normally news is you know, I always say if you happen to be in a stock and you get positive news in it, and it causes your stock to move up, you know, sell instantly. News meaning rumors, chatter, anything like that. And we've been getting some good setups, and I have to give credit to the Benzinger News Service, who has this pretty decent audio alerts service where they have a trader, we call him Mr. Land, and he's been on top of it, and it's made us some money in the markets. So a shout out to Benzinger News. And you can actually put a link in here, maybe. Definitely check out their service. So that's it. This week, coming into this week, again, Sunday, futures will open up 6 o'clock tomorrow night. You definitely want to be checking in on the site, see how they open up. We'll be covering those live, and there'll be a lot of traders in the room trading the overnight futures Sunday into Monday. It should be a volatile night, and I'm going to try to be in the room also trading. And then this week we have a special announcement. We're going to be starting something new, and we're going to be announcing it this week, so I'm looking forward to that. Hopefully we can do that Monday or Tuesday. So hopefully this video finds you good, and I hope you enjoy the rest of your weekend. I broadcast the markets daily, and you know, again, these techniques are the ones we do live on the air at DayTraderRadio.com. So come on by. We're on the air all day, from 8:30 to 4 o'clock, and then overnight shows. So enjoy the weekend.